Hey, what is happening, everybody? It is still Wednesday. This is my second report today. Let's do an update on this market. I want to give you my analysis. We're going to look at others' analysis. We're also going to look at some of your comments. So let's have a little bit of fun. Let's get started. Now, first of all, as I left off in our last video, I would be very, very cautious about going long in this market right now. With the new administration, are we so sure that the Fed is going to be there like they were for the previous administration? Remember, the previous administration, they were very critical about rate increases, rate hikes, and it was a constant push back and forth for the Fed to continually prop up the markets and to continually lower interest rates. We also had the liquidity crisis, the endless liquidity injections into the banking system. Are you sure that that is going to continue into this new administration? Well, let's take a look. We're off to a rocky start since the January 20th their new administration took over. Dow Jones today down over 600 points. Is this the top? Has the market already peaked? I wouldn't be betting against that. And I see a lot of so-called stock experts out there saying the market's going to continue to go higher. And I would like to find out, why they're so confident that that's going to happen. Okay, so we see all major indexes today down. Crude oil still hovering above $52. Gold took a hit, silver took a hit. Also, Bitcoin today dropped under 30,000. Where did you hear that when Bitcoin was hitting 39, 40, 41,000, you're going to be in for a big pullback? And yes, we nailed it. And as I said, I took some off the table at 40,000. I am not going to be dipping back into crypto or Bitcoin at this moment. I'm still holding a lot of crypto, but I did take some gains, and I think you have to do that in these markets, in these volatile times that we've been in, and that I think we're going to be seeing a lot more volatility going forward. Okay. Also, in our last report, we talked about that huge short squeeze in GameStop and how we're likely going to see a very big pullback, and I want to give you Peter Schiff's take on this. All right, so here's Peter Schiff over on Twitter. And this turned into a bit of a debate. So Peter says A. Chamath, and this is a investor and venture capitalist here. Basically, he buys GameStop calls. He then discloses his position along with bullish comments on GameStop to his 900,000+ Twitter followers. His tweet causes an overnight surge, allowing him to quietly sell for huge profits before announcing his sale on CNBC. Pump and dump ? Okay, now that is, if it is true, it's a definition of a pump and dump. You get someone that's in the public eye, such as a Jim Cramer or major investor, someone with a lot of eyes on them. They talk the stock up. They tell everyone that they're buying it. They're taking a position, a large position. And then all of their followers pile into the stock. Now, I think it was more than just a tweet by this investor here, this venture capitalist, but you see similar pump and dump schemes in the penny stock market. You see those commercials with the penny stock guys. I'm trying to think of the names now. There's Warrior Trading. There is, and I'll just pull up a couple images here so you guys know who I'm talking about. You've probably seen their commercials. They try to get people in their chat rooms. They tell people what position they're taking. They get everyone to pile into this particular stock, especially penny stocks. That way the price can really move. And then a lot of these penny stock so-called gurus will sell their position at the blink of an eye. They use hotkeys so they can get out of the position very quickly. And then all of the thousands and sometimes tens of thousands of followers a lot of times get caught holding the bag. All right, another one is Timothy Sykes. Right, these penny stock guys, they'll pump up a stock. They have thousands and thousands of followers. So for those of you who don't know what a pump and dump is, I just wanted to give you an example using the penny stock pump and dumpers, I call them, or they call themselves gurus. I call them pump and dumpers. All right, so Peter is basically saying that GameStop is a pump and dump. We'll have to see. I think the stock is eventually going to come back down. And anytime you see a parabolic move, just like we saw in Bitcoin when it ran up to 40,000, the same thing with when Bitcoin hit 20,000 a few years ago, we see these parabolic moves. there's usually always a correction, right? Nothing goes up forever, nothing goes up in a straight line. You're going to see a pull back in the stock. Now here's the little bit of a debate that happened. Chris over here, he accuses basically Peter Schiff of doing the same thing with gold. He says, you've been trying to do the same with gold for 20 years, but fail miserably every time. Stay mad. So he's accusing Schiff of being a pump and dumper in gold. But Schiff responded, quote, not even close to the same thing. First, my comments can't move the gold market. Second, I have never sold any of my gold over the past 20 years. So to be a true pump and dump, the person trying to do the pumping would have to sell their gold. And Peter's saying it can't be because he doesn't sell his gold. Now let's just go back to GameStop stock. A lot of tongue twisters today. Let's go back just 5 days and we can see what's happened. It went from the low 40s up to now 347 as it closed today, January 27th. And let's zoom out to a 1-year chart to show you the magnitude of this run up. Right? It's bound for a pullback. Could it get pumped up higher? Absolutely. But I'm thinking it's going to come back down into the 150 range in a matter of months. Right? So we'll check back on that. I think it could be even sooner than months. But for anyone doing put options, I would recommend going out at least 6 months and getting something that doesn't expire until at least June. Alright, so let's have a little bit of fun. Let's talk about some comments that were left on this channel. And this is from Jose. And he's talking about this blueberry analogy. I just picked blueberries, just something off the top of my head, to point out that when you give stuff away, when you have handouts, when you have programs to assist people, it typically is a price inflation mechanism, right? So when you give stuff away, it causes artificial demand, therefore it causes a shortage in the item or in the commodity, and then the people that actually have to pay for that same item or commodity are going to end up paying higher prices. And we use the example, if you give away blueberries to, let's say, all the males, and then the people that are not male would have to pay a higher price because of the artificial demand because of all the free handouts. Well, he says the following. Jose says, your analogy about blueberries works for commodities, but housing should be a government-private collaboration. If you let supply and demand, it will always concentrate capital in the hands of the few, making it more profitable to service the wealthy rather than the poor, which is what we see in California. People can live without blueberries, but everyone needs a place to lay their heads down at night. So we have to make it more affordable for middle America and provide assistance and housing options for the folks that would never be able to afford it. Now let's look at his last line. We need to provide assistance and housing options for people or folks that cannot afford it. All right, so first we have to ask the question, why can people not afford it? And I responded here, people could afford housing if prices were allowed to correct. Bank propping, endless fiat creation, reserveless lending, that's the no reserve requirement now for the banks, housing subsidies, all help keep the bubble inflated. Therefore, no assistance / handouts are needed, right? So if you take away the fiat banking system, the reserveless lending, the banks can just loan out now endless amounts of money because it's created out of nothing. It's just digits on a screen. And all the housing incentives, right? When you take all those away, prices come crashing down. It's pretty simple. If you don't intervene in the markets, prices will correct to what people can afford, and therefore the affordability problem is fixed. Right? So again, take away the intervention, and his last line here becomes moot because people can then afford the item and they can afford housing. All right? Allow the bubbles to pop, stop the market propping, and the affordability problem goes away. It's pretty simple. It's called the free market. We haven't had a free market in the United States for over 100 years. Right? But I always appreciate these types of comments, you know, the critical feedback, or not so much negative feedback, but what's the word? Constructive feedback. And people making their point, asking questions. That's what we all need. We all need to talk about these things so we can, you know, have solutions discussed. All right, let me give you another example. If you went out, let's say the Fed went out and deposited $50,000 in everyone's checking account, but it was contingent on people had to spend it on housing. They could pay their rent with it. They could go out and put a down payment on a house. What would happen? You would see prices skyrocket. You would see rents go up because the surge in demand. You'd have a lot of 20-somethings moving out of their parents' house saying, I'm going to go get my own apartment now. I've got $50,000 to pay my rent for the next, 1 or 2 years or more, depending on your location. You'd have even more demand for housing. You'd have bidding wars even more than they are now, 30, 40 offers per listing, right? So the thought of helping people actually makes it worse in the end because it causes inflation, it causes false demand. When you hand out assistance to people that, quote, can't afford things, you actually are shooting those same people in the foot because you're making affordability even worse by causing that false demand and making prices go higher. Right? So assistance and helping people, quote unquote, helping people on the surface sounds good. It sounds like something that, we should want, but it actually hurts the same people in the end, and a lot of people are going to end up in RVs and sleeping on the park benches that you intended on helping. Speaking of sleeping in RVs and on park benches, here's our next comment. Davion, a commenter on this channel said, "This is why my end game is to own an RV. Can't kick me out of something I can take with me." And that's what a lot of people are doing. We did see a huge demand in RV sales, and a lot of people just like to have them as a backup. And I'm looking to get an RV here just because all the fires we have out here. It would be nice to have a place to, not a place, but an RV to take with us and still be able to live in it temporarily if there ever is a natural disaster in our area. And I put down here, RV equals a good, nearly fail-safe way to ensure a roof over your head. Just don't forget to pay the registration. They could impound it. So there's always going to be overhead or some sort of carrying cost. Even if you own the RV outright, you got to pay that registration, and you're going to want to keep insurance on it. If something happens, you could still lose it. So there's no completely fail-safe way to keep a roof over your head. But it's a good discussion nonetheless. I'm going to wrap this up here for now. Thanks everybody for your comments. I'm going to try to integrate more of your comments into these videos and more people following me on Twitter and having discussions over there and so forth. Until next time, thanks everybody for watching. Stay well, stay safe, stay prepared. Bye for now. Peace.